Hi, everyone. Thank you for joining me for the latest Money Show expert interview series that we're doing here ahead of the Global Portfolio Strategy Summit. Today, I'm speaking with Shayna Orzak Sissel with Banrion Capital Management. As founder and president of Bondrian Capital Management, Shayna helps independent advisors navigate the complex world of alternative investing, bridging the gap between public and private alternative investment opportunities. Additionally, she assists clients with investment platform development, alternatives and portfolio construction, and developing best practices and alternative investment due diligence. So Shayna, thanks for joining me.
My pleasure. I'm happy to be here.
Great. So like the introduction said, your work centers around helping advisors and investors get more exposure to alternative investments. For those who may not know exactly what that means, why don't you expand on that and maybe give them an idea of why that's so important to have exposure to alternatives in today's market environment?
Sure. So it's a lot easier to tell you what isn't an alternative than what is, because the universe of alternative investments is very broad. But what it isn't is traditional long-only stocks or traditional long-only bonds. And when I say stocks and bonds, I mean the equities and fixed income that trade in the public markets, because private equity and private credit actually are alternatives. So that's basically what it isn't. Everything else is alternatives. So essentially, the reason it's so important is because these are important diversifiers, but it is a very broad universe. And so it's very difficult to navigate if you don't know all of the idiosyncrasies that are out there, all the different ways that you can do alternatives. And it is kind of the wild, wild west. So that's why I spend a lot of time with advisors and investors who have traditionally been left out of the ability to access and to invest in this space. Institutions have always invested heavily in alternative investments. In fact, most institutions allocate somewhere between 25 and 30% of their investment portfolios to alternatives. But to date, on average, the individual retail investor and the advisor community have traditionally only allocated about 3%. And they're missing out on real opportunity here, not necessarily for returns. We all see the headlines of the sexy hedge funds that return 1,000% and all these big gains. And yes, there are some rare cases where that happens, but the benefits of alternatives go beyond that, in that they can help really diversify your portfolio, reduce volatility, and improve returns over time.
I'm glad you brought up the diversification concept, really, because I saw an interview you did with the Journal last summer talking about the 60-40 model being dead. A lot of people assume, oh, if I have 60% stocks, 40% bonds, I'm fine. That's great for any environment. And clearly that wasn't the case last year. So I'm kind of curious if you could talk a little bit about that and what people need to be doing to go beyond that 60-40 split.
Well, I just want to make sure that we acknowledge that the 60-40 is not dead, it's evolving. I prefer to refer to it as evolving. But what that basically means is that you have to go beyond the 60-40 if you want to have less volatility, more consistent returns. And that's really where alternatives play a role. It wasn't until 2007 that individual investors could even access this market. That's when the SEC relaxed the 40 Act to allow for hedge fund-like strategies to be available to everybody through mutual funds and later on ETFs. And so it's still kind of new. And, they launched right as we were about to go into one of the longest bull markets in history. So they weren't very sexy. But I can tell you that during the presentations that I do for the Money Show, I often show this chart, which is that if you had a 20% allocation to alternatives over the last 10 years, you would have slightly improved your returns, about 20 basis points to your overall returns on an annualized basis, which isn't very sexy and you probably wouldn't even notice it, but you would reduce the volatility of your portfolio by a minimum of about 150 basis points. So that's fairly significant. And then those numbers are pre-2022.
Yep.
After 2022, it would actually be even more meaningful, because over time, these portfolios, if you add that 20%, would have basically performed in line with a traditional 60-40 until 2022, where they absolutely outperformed, and you actually would have meaningfully outperformed a traditional 60-40 in 2022 if you had this 20% allocation. And I want to just clarify what I mean by 20% because it can be a little confusing.
Yeah.
I'd love to say there are these nice round numbers that I can just say there, like, oh, 60, 40, 20, 20, but it's not really like that. So the best way to think about it is if you had, say, $1 million to invest, you would take 800,000 of that and you would put it in your traditional 60-40. And then you would take the remaining 200,000 and you would put it in a diversified alternatives portfolio.
I know, as you mentioned at the outset, I mean, the alternatives world is so large. There's so many different ways you can kind of take that concept. Could you just maybe share 3 or 4, whether it's asset classes or types of investments that fit into that alternatives basket now and that seem to be appropriate for this market environment we're in?
So there's all sorts of different ways to look at alternatives, but when I think of it as a diversification option, I focus on things that have low correlation. So that's where I really start looking. People talk a lot about private equity and private credit, and those things are wonderful, but they're just different ways to gain access to credit and equity that have the opportunity to have outsized returns because you're taking advantage of the fact that you're in a private market where there's less information available. But in the case of how I approach alternatives, I focus on low correlation to no correlation types of strategies. And some of the categories in the alternatives world that fall into that bucket are things like equity market neutral, global macro, managed futures, arbitrage strategies, and there's fixed income arbitrage strategies that can include things like capital structure arbitrage, where you're going long and short based on where the credit is in the capital structure of a company. There are things where they do arbitrage across high yield and investment grade. There's municipal bond arbitrage. There's all sorts of different arbitrage strategies, but all of them tend to have low correlation to traditional markets. Those are kind of the keys. There's some great multi-strat, and then some more esoteric things like asset-based lending, peer-to-peer lending, and you can even have a little fun and have a wine investment or music rights investment, things of that nature, depending on if you're comfortable with opportunities that are great diversifiers, but maybe not the most liquid opportunities in the world.
Got it. Well, you mentioned, I actually saw your announcement earlier about the outsourced chief investment officer technology, sort of a way to help advisors and investors get some more exposure to this. Briefly, if you want to talk about that a little bit before we wrap things up, I'd love to hear it.
Sure. So it's a really exciting day here at Banrion Capital Management because today we announced the launch of our tech-driven outsourced CIO platform. More and more advisors are realizing, especially after 2022, that they should have alts in their portfolio. It's the first real opportunity we've seen to really test the thesis that alternatives are diversifier and have risk management qualities for portfolios. So what Bondrian is doing through our tech-driven OCIO platform is we're providing advisors the way to kind of, through a portal, access educational content, turnkey product solutions, as well as any of our research and commentary that my firm provides to advisors. We also provide advisors with an investment officer, a dedicated investment officer, to help with clients that have questions, to do webinars on behalf of their firm, to help them with client conversations in those quarterly or annual reviews that they have. But we also have a portal where we have strategic partners. So we work with a lot of hedge funds and alternative mutual funds and ETFs. We help them understand how to best support advisors and individual investors in their products and in their content. And so our strategic partners are a curated list that we do due diligence on and provide that due diligence to our advisors. And then through our portal, our advisor clients or anybody who's using the portal can directly connect with these partners and be able to do customized screens, customized analysis, ask questions, and just have a centralized place for communication for all things alternatives. We think it is going to be a game changer for not only investors, but also for asset managers, because this is a space where they can't advertise. So if you're a private market hedge fund, in order to maintain the status with the SEC, you can't market your products. But if you're in our platform, you have been screened by us as being seen as appropriate for our audience. And so you are able to reach, hundreds, hopefully hundreds of thousands of investors to be able to talk about your product, and for those investors to know you exist, because in essence, there are a lot of access platforms out there, but none that do what we do, which is not only provide access, but education, commentary, and solutions and due diligence for our clients.
Well, Shana, it's certainly an exciting product, exciting time for, the alternative space. I mean, one of the main reasons we're pulling together this summit is we want investors in this tricky market environment to get the guidance they need, to hear about different alternatives in the private and public markets, and really get their portfolios squared away for, what should be an interesting 2023. So I thank you very much for your insights. I thank everyone for watching. I hope you did enjoy this interview. If you did, you're going to love seeing experts like Shayna in person. You're going to have the opportunity at the summit to ask questions about their unique investment approach and really interact with some of the smartest people in finance. So check out the link in the video description below. You'll find more details about it. And I look forward to seeing you all in New York. Thanks again for your time.